Blackstone is an American financial giant with over $1 trillion in assets under management.
What we do is we buy assets, say we buy a company, and we make them better.
Real estate is one of Blackstone's major divisions.
Blackstone is really in the business of marketing investment products. A byproduct of that is they became a very large landlord.
The company has an ownership interest in at least 274,000 rental housing units. That likely makes it one of the largest landlords in the United States.
A big week for the crypto industry, as Congress could pass a series of bills that would be the first to regulate this booming business. Cryptocurrencies are a form of payment and an asset class which are created, used, and stored electronically. They do not rely on any bank or government for their value.
The Dallas housing market is contending with its biggest inventory explosion in decades. The supply on the market is an absolute deluge, and as a result, home values are now dropping across DFW, and they could actually drop by a lot over the next year. Is the Austin housing market finally a good time to buy? Home prices have dropped by over 20%, and we're starting to see some signs that maybe Austin could be the first market to complete its crash cycle. And in this
we about to bring the king in.
Tell everybody in the paparazzi.
King, yeah. We about to bring the king in. Roll out the carpet for the one who can't forgive sin.
Tell everybody.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your man Dale and Cliff back in the saddle again for another edition of Real Estate Friday Live here on Friday at 5 p.m. CST. Cliff, how you doing, big time? You doing all right, baby?
Yeah, man, doing good.
Man, how was the week, man? Was it a good week? Was it a good, man?
Man, busy, very busy, man, which is good, man. If you run a business, you want it to be busy. So, man, I can't complain, man. Blessed.
Yeah. Now, did we get the bag, though?
We got the bag, yeah.
Yeah, we got the bag, man. We did get the bag, man. It is just, y'all, this is probably one of the most busiest weeks of my life. Boy, I mean, we got so much stuff cooking on the back end, y'all, but it's good. And I'd say it's a life change. We ain't going to tell y'all nothing about it yet until we get it all set up. But Cliff is a big time, big dog.
Man, yeah, I'm telling you, it's going crazy right now.
It's going crazy. It is, man. If you could, guys, do me a favor, guys. If you could, guys, do me a favor, guys. Share. Not that one either. Good God. See, I told y'all, man, I'm tired. I'm tired, man. Nope, that's not either. Yeah, if y'all could just share, like, and subscribe, guys, if you could, guys. I'm sorry, guys. Here it is. My bad. Again, I'm tired. Like, share, subscribe, y'all, if y'all could, man. Click on the bell there, guys, which would be good. So when Cliff and your partner come live, you get to come check us out, man. That's what we're talking about, man. But Cliff, man, let's dive into this real quickly, guys. Here's our topics for today, guys. Boom, here it is. Number one, Blackstone is buying real estate again. Real estate, a lot of single-family residences, guys. Number two, Trump signs that cryptocurrency bill today. This happened 30 minutes ago, y'all. Big time. Number three, 50% spike in canceled listings from realtors. What you say? And number four is the Austin, Texas market rebounding, y'all. Man, it's going to be good. But Cliff, man, before we dive into topics, man, real quickly, guys, you know what we do? We have a licensed appraiser on the panel. Cliff, what's going to tell us what's going on in the market, big dog? What you seeing? What's going down?
Man, it's an interesting market right now. Man, the last handful of years, I'm saying it's been different. All right. So we had appreciation that was going crazy during COVID, a little bit afterwards. Prices were going up, and I'd never seen like it. When I was running my analytics, I was seeing month over month turns and valuation going up and up and up. I think what ended up happening is when they started adjusting the interest rates, and interest rates are at the highest they've been in almost 30, something like 30 years.
Yeah. Yeah.
So that is causing more listings on the market, or at least the listings to actually stay longer. Because, and I deal with this every day. Every day I'm talking to people who say they cannot leave their home. They want to. I would say 3 out of 4 people I talk to want to leave, but they're in 3-4% interest rates.
Wow.
And so to them, going to a 7, it don't make sense.
It don't, Cliff. Didn't you and I say this 3 or 4 years ago?
Yeah.
We're not magical guys. It's just math and numbers.
Right.
I don't know about you, Cliff. If I'm paying a 2% interest rate, I ain't trying to go up to no 7. Are you?
No, it's crazy.
And FHA is what's the FHA rate as of today?
Man, I just checked. It looks it's probably, if you have good credit, the highest rate is probably around 6.5.
6.5, yo. Congratulations. And guys, that's the new normal. That is the new normal. 5.5% to 6.5%, 5%, 5 to 6.5. That's the new normal. Get used to that. You're not getting down to 2 or 3%. It's not happening.
No.
That's
the only reason why it ever even got that low was because, well, one, we had the financial crisis, so they dropped interest rates way down.
Correct.
To about 3%, and they kept it there to drive, more productivity, more investment, and they kept it there, and they rose it up a little bit to about the 4s, in about 2016, 2017.
Yep.
And it was there until COVID.
Yep.
They dropped it back down to about 2%.
Yep.
And they jacked it back, and then they cranked it up to about 7%, 8%, and now it's on its way down. But I mean, even if we get a new Fed director, he's probably gonna drop it. If we're lucky, 1 point.
Correct.
Probably
Now,
about 1 point.
I don't think that's gonna move the needle at all. Maybe very little. I don't think it is. Going down from a 6.6 to 6.5 to 5.5.
Yeah, that's probably the best you're gonna get.
I don't think
unless you're having a very aggressive Fed, because we know Trump, he hollering, he yelling, he talking about getting somebody else. If he does that and he gets somebody who's very aggressive, maybe you might get 1.5 points.
Ooh, and with this new crypto bill being signed, I wouldn't put it past them.
Because here's the thing: there's one thing that I've noticed that people who are looking at doing in the Fed that I think is interesting is some are like, just change it. They are not conservative in the way that they think the adjustment should go. If it's too low, raise it.
You know what? That actually makes sense. So because there is no time frame or when they can change it. They can change it every day if they want to. Am I right?
Yeah. I mean, most of the time they do it at the meetings, but they do the meeting every couple months. Yeah. And I think Trump had said this at one point, and I've seen other people say the same thing, which is drop it.
Yeah.
If you see it being negative, then raise it up again. Yeah. You can do that. It's not a big deal. Like the one we have now, he waited 6-7 months to make it.
Cliff is not a fan of
nah, man. Y'all hear me.
He's not. He can't. I rock with him. I can't stand that dude, man. He's too political. But I digress, man. Let's dive into what's going on, Cliff, man, real fast. The first, y'all, again, a private equity landlord. Knock, knock. Who's there? Why Blackstone is buying homes in the U.S. again. Again. Okay, y'all. All right. Let's see what's going on, guys. And I want you guys to listen. Listen to what they're saying. Listen to this. I want you to pay close attention to their strategy. Their strategy. Listen. Here we go.
Blackstone is an American financial giant with over $1 trillion in assets under management.
What we do is we buy assets, say we buy a company, and we make them better.
Real estate is one of Blackstone's major divisions.
Wow.
Blackstone is really in the business of marketing investment products. A byproduct of that is they became a very large landlord.
The company has an ownership interest in at least 274,000 rental housing units.
Wow.
That likely makes it one of the largest landlords in the United States.
Jeez.
In every market where we operate, we own less than 1% of the housing available.
Their portfolio of rental housing is concentrated in Sunbelt regions like Texas, Georgia, and Florida. Many of these units are apartments. A smaller portion are single-family homes. The company also has stakes in mobile home parks, student housing, and more.
That's a credit because they went after like apartment housing and sort of residential housing, as opposed to going into malls or retail side of the business, which has really just struggled.
Rents keep rising in many parts of the U.S., particularly major cities that aren't building enough housing. As a result, some cities are considering policies that protect tenants from rent hikes.
If that happens, guys, it's curtains for that market. It's curtains. There's gonna be a mass exodus. But Cliff, real fast, man, look at their portfolio real fast. Look at this portfolio. Look at the housing they have. Look at this multifamily, single family resident rentals, mobile homes. They have student housing. They have a pretty robust balance sheet.
Yeah,
they really do. And guys, I'm gonna let you got a private equity guy here on the screen. Hello. I'm gonna let you know the whole plan and how you can copy it. Let's go back to what it was real fast. Let's get to it. Here we go.
To the US, particularly major cities that aren't building enough housing. As a result, some cities are considering policies that protect tenants from rent hikes. If these measures pass, they could affect Blackstone's bottom line.
I just think that it's time for the landlords to accept that they can't always make as much as they would like.
So, how did Blackstone become one of the largest landlords in the United States?
Listen to this. This is crazy. Wow.
Most of the rentals Blackstone owns are in massive multifamily buildings. Take, for example, Stuyvesant Town Peter Cooper Village. Blackstone acquired this property in 2015.
Stuytown is a city within a city. It was built in 1947 for returning veterans. There are 11,242 units and approximately 30,000 residents.
Good God.
Today, all of the apartments in Stuytown are rent stabilized. That's a big benefit for long-term tenants like Susan. She pays significantly less than the market rate of rent in New York City.
I moved into Stuyvesant Town in January.
Cliff. Cliff. Let me, guys, I want y'all to see the power of what they're doing real quickly. All right, come on, stupid thing. Cliff, I am trying to get this. There we go. I'm going to stop sharing this real fast, and I'm going to bring up the calculator. Cliff, guys, I want y'all to see how much they're making. Remember, they just said that they have 11,242 residents, right? And we saw in New York, because that's in New York, it's $4,500 a month for rental rate, correct?
Mm-hmm.
Cliff, 11,242 times 4,500 a unit, Cliff. They're bringing in $50 million a month.
Oh yeah, easy
in cash flow. Now get this, guys. That money that they invested that money with, that's not debt. They struck a check for that. And whose money is that? Your retirement money. That's not debt. Now they're paying you an annual return, but the annual return is 3-4%, 8%. That's nothing for them.
Right.
That's nothing. This times 12, guys. Good God. That is $607 million annually. Remember, they got 2 units, 2 buildings. That times 2. That's $1.214 billion annually on 2 buildings.
That's crazy.
That's crazy town. And they're probably paying in the dividend, Cliff, 8% before fees.
Wow.
Before fees. With fees, 3%. They killing the game. They killing the game, y'all. This is the game you got to play. This is the game you got to play, guys. Cliff, man, what do you think about that, man? What do you think? That type of return, bruh.
I mean, it's BlackRock. You know what I mean? BlackRock has the ability to spend money like nobody else. They're not. And do you think they're paying real interest on that? Do you think they're paying a lot of interest? No.
Hell no, man. No. Again, if they're using your retirement, which they're using, because your retirement is investing into funds, investing into other funds, investing in other funds, and those funds wind up being BlackRock or Blackstone.
Right.
And then they have to put money to work, right?
Right.
So what do? They go out and buy real estate. And they go buy these big old buildings in New York because they know they can buy a building and get a whole bunch of tenants there, right? And you see the rate of return. Sick.
Right. It's crazy.
Sick. And that's just 2 multifamily buildings. We ain't talking about student housing. We ain't talking about RV parks. We ain't talking about rental properties. They're probably clearing, Cliff. They're probably clearing billions a month.
You think it's billions?
Yes, billions a month. Cliff, look at all this real fast. Look at their portfolio, guys. Let me go back. Let's show it real fast. Look at their portfolio. Come back. Look at this. Let me go back. Here we go. Let me go back. Look at the portfolio, guy. Look at this, Cliff. Look at that.
And sort of residential housing.
Look at all that. Look at all those properties. I just talked about 2, and they're making $1.21 billion annual. 2. Look at all these homes they own. Jeez, they're making billions a month.
Yeah,
and that's just in their real estate portfolio. Look at what else they own, guys. Look at this. Numbers. Look at this. Look what else they own, Cliff. Credit cards, credit and insurance. You know they're killing insurance. They killing the game of insurance. Private equity, investing in the companies, real estate, and multi-asset investing. Look at this, guys. They killing the game. Now I see how they have $1.2 trillion in assets. That's with a T, not a B.
Man, they the ones behind everything that's going on in the market. They got their hands everywhere.
Everywhere. This is how you should invest. This is the blueprint. This is what Buffett does. This is what Jerry Jones does. This is what Mark Cuban does. All the guys on Shark Tank, this is what they do. This is what Blackstone and BlackRock are 2 different companies. This is Blackstone. Right. They do the same thing. It's just BlackRock is bigger than Blackstone. BlackRock, they manage 15 trillion with a T. 15 trillion. It's crazy, guys. This is crazy town. Again, you have a private equity investor on the screen with you guys. This is not hard to do at all. You need to first determine, do you want to be a passive investor or do you want to be an aggressive investor? Passive is fine. That's all good. But I can say this right now, guys. If you want to be an aggressive investor, you could be aggressively passive or aggressive day-to-day investor. What do you want to do? What do you want to do? The blueprint's right here. It's right there. That's crazy, Cliff. You want to say anything, man? Good God.
Nah, man. They got the money. They got investors. People go to them, and they know they can handle it. They got the best in class handling trillions of dollars.
Jeez, my God, man. I'm a little jealous right now. Damn. Wow. Okay. We all. That's again. Just go on to CNBC, right, and watch this. What CNBC? Watch it. It's called "Why BlackRock is Buying Homes in the U.S. Again." Just go watch it. You'll learn something. Now let's go to the second one, guys. Yo, Cliff is gonna love this one.
I already know.
President Donald Trump signs the cryptocurrency bill called the Genius Act and the Stablecoin Act into law today. It was done today. Before we let Cliff cook, all right. Before we let him cook, Cliff, we're gonna play a little video real fast, couple videos, and then I want you to break down how this is big and how this may affect the real estate market, specifically the mortgage rates. Okay.
Okay.
Okay. Let's dive into this real quickly, guys. All right. You guys got a special treat today, man. Y'all, boy. Ooh, here we go. Let's get in, guys. Let's get in. Come on, open up. Here we go. All right, let's go. Boom. All right, here we go, guys. Let's get it in. Here we go.
Big week for the crypto industry, as Congress could pass a series of bills that would be the first to regulate this booming business. Cryptocurrencies are a form of payment and an asset class which are created, used, and stored electronically. They do not rely on any bank or government for their value. Our Lisa Desjardins explains.
Two key bills are up for votes. The Genius Act regulates stablecoins, what some see as the least risky digital assets because they're backed by real-world assets like dollars. That would mean mainstream banks could increasingly use stablecoins. The other bill, the Clarity Act, regulates digital currency and assets overall, splitting oversight between the Securities and Exchange Commission and the Commodities Futures Trading Commission. To help us understand what this legislation would do and its impact, we're joined now by two guests.
Here we go. These guys will be boring. Now, let's go over to Mark Moss real fast. Now that we got kind of a little bit of the of how it works as far as the acts and what they govern, things of that nature. Let's go over to Mark Moss real quickly, Cliff. And we've watched this before, but he predicted this a long time ago, and it's here. Here we go.
What if I told you Trump just made a move that could completely rewrite the U.S. financial system, and nobody's even talking about it? Now, for the first time in history, the U.S. government is officially endorsing digital assets and stablecoins, and they're pushing banks to play a major role. Treasury Secretary Scott Bessent just said, quote, "We are going to keep the U.S. the dominant reserve currency in the world, and we will use stablecoins to do that," end quote. But here's where it gets really interesting. They have two ways to do this. One of them is a complete government-controlled system, but the other, it could take us back to a financial model from over 200 years ago, where banks competed to issue their own money. A system that some call chaotic, but others say was one of the greatest golden ages of financial innovation. So the big question is, are we about to see the return of free banking? And if so, what does that mean for you? By the end of this video, you're going to be able to understand exactly what's happening, why the government is pushing this now, and how it could create one of the biggest wealth building opportunities of the decade. Now, real quick, I'm Mark Moss. I've built and exited multiple tech companies. I've invested through several boom and bust cycles, and today I'm a partner at a leading Bitcoin venture fort. We're helping sites that worry Trump's secret plan, how his administration is fast-tracking financial changes right now, why this is happening, the real reason why the U.S. is actually trying to embrace crypto, the new banking era that could spark this new age of financial competition, and, like I said, what it means for us. All right, let's go. All right,
So Cliff, he's gonna break it down. Do you want to cook now? Or do you want him to talk a little bit more?
Yeah, let's hear what he got to say.
Here we go.
Break this down. Why is the U.S. government suddenly pushing stablecoins? Why now? And more importantly, why is Trump leading the charge on all this? Well, this all became crystal clear just last week when the White House Digital Assets Summit met, and Trump's Treasury Secretary Scott Bessent made this huge announcement. He said, quote, "We are going to keep the U.S. the dominant reserve currency in the world, and we'll use stablecoins to do that," end quote. Now, if I just pause right there and think about that, I mean, this is huge. For years, the U.S. government's been either ignoring or actively fighting against cryptocurrencies. But now, they're embracing them. They're embracing stablecoins. So why? Well, partly because they have no other choice. You see, the U.S. dollar is under massive threat, like never before. Inflation's been spiraling out of control. Global trade is shifting away from the dollar. China's aggressively trying to bring other people into its own currency. We have the BRICS nations trying to set up their own currencies, and China's trying to set up their own stablecoin, the ECNY. And they want to do this to bypass U.S. financial sanctions. But while governments might want to get away from the U.S. dollar, in favor of their own currencies, the people around the world, well, they still want dollars. As a matter of fact, they want dollars really bad. So Trump and Bessent, well, they want to get dollars to the people around the world, and they see stablecoins as a way to do this, to weaponize digital dollars, to make sure the dollar remains the world's default currency in the age of crypto.
Yes, sir.
And here's the crazy part. 95% of all stablecoins today are already backed by the US dollar.
Wow.
But currently the problem is, at least for the US banking cartel, the banksters, is that all these stablecoins, they're being issued by private companies like Tether and Circle, not by US banks. And that's what Trump wants to change. Instead of relying on random offshore companies, the US government wants American banks to start issuing their own stablecoins, ones that are fully backed, regulated, and integrated into the banking system.
Wow.
And here's where it gets even crazier. This isn't some far-off proposal. Like, it's already happening.
Yes.
Like, right now. Trump's already started making huge moves behind the scenes to make this a reality. Congress is working on new laws for this. U.S. regulators are already flipping their stance on crypto. And the big banks, they're also preparing for what's coming because this regime change is happening faster than anyone's expected, all right? Hey, I want to just take a break from this video for a second just to let you know that we've been talking about...
So far, man, what do you think so far, brother?
There's a lot of companies that are going to go under. Because, you know, once you can send money using stable coins, it's pretty much, we're already kind of doing it with Venmo. We're doing it with Cash App. It's the same thing.
Sure.
Except it's pulling from your debit card, it's sending it versus just you already having stable coins you can send.
Correct.
But what it does do is it does start global dominance because now the world, think about it. In the United States, it's obvious you're going to get the dollar. But when you're in other countries around the world where their currency, inflation's not 4%.
No.
It's 24%.
Correct.
And it goes up, it goes down, and they want something stable.
Yep.
Now for them, they get paid in the whatever it is, the peso, they get paid in whatever currency they're in. As soon as they get that money, they can easily go online and buy stable coins, and easily. They don't need a US bank. They can just literally log in, create their own account, and they got stable coins.
Yes.
If they need to use the money in their own currency, they can turn it right back easily. And conversion, that means the world will use the dollar.
Wow. So, Cliff, is it safe to conclude that this supplants the US dollar as the unabated champion of world currency?
Oh, without a doubt. Because it now makes every person on the planet have the ability to have a U.S. bank account. Every person on the planet can have a U.S. bank account.
Wow.
Why would they have anything else? Why would you? Unless their government forces them to have it. But again, this is internet, so you can't really stop it. They're gonna use a VPN. They're gonna use something around it, and so they're like, oh, you want me to? Okay, because China, they've already stopped all crypto.
Yeah.
So it's insulated with them, and I'm guessing other countries are going to try to do it as well.
Yes. Now, during the Biden administration, China tried to make a push with their own cryptocurrency coin. They tried to toward the end of Biden's administration before the election, right? Trump won the election. Trump saw that. That's when he made the pivot over to crypto. So that's when he made the pivot. I believe it was already in his plan, but he actually saw what Mark talked about, which 95% of stable coins are already done in the US dollar. So he knew, wait a minute. What Biden did when he actually sanctioned Russia, he destabilized the commodities arena on the globe because it threatened the petrodollar. It threatened it. And so that's when you begin to see BRICS, and then you begin to see China begin to buy oil from Russia with their own currency because the petrodollar was no more based on what they were saying, right? So Trump sees this and says, okay, you're trying to threaten the petrodollar. Now, I believe what Biden did when it came to bombing the Russian pipeline, that was a good move. That was a good move. That was a petrodollar move. That's what he did to make sure that the petrodollar was still strong, but it was fractured, right? Because of what he did initially. So, because the petrodollar, there's no agreement. It's a handshake deal. It's a handshake deal. That's all it is. So, how do you begin to force the world to have to use the U.S. dollar? Simple. You do what Trump did. Go crypto. That's what he did. That's what he
Yeah.
did. But what he did, what was smart, was he went to Saudi Arabia and Qatar, the two biggest oil producers on the planet, and said, "Hey, let's get a deal." So it happens that the deal was $4 to $6 trillion. They knew what they were doing the whole time. This was a brilliant play on a global stage from a currency standpoint, asset standpoint, and a cryptocurrency standpoint. This was a boss move. You agree, Cliff? You disagree?
Yeah, it's genius. I think it's smart. I think it's smart. You now allow multiple people. I mean, everybody around the world to have the U.S. bank account. You now allow more transactions to take place in the dollar. So you're probably gonna. I mean, I'd short every other currency.
Yes.
I would over the long term. I'd short most other currencies, and that's Bassett. Bassett, that's his background. That's what he does. He is a global economic trader. I think he got his big payout in forex, right, in currencies. And
Yes.
I'd
Yes.
short currency because now again, for example, Dale, let's just turn it a little bit, right?
Okay.
Let's say that we're gonna go with the French dollar, franc, right?
Yep.
How would you right now? Let's say that's the global dominant currency. How would you get some? How would you like, man, the US dollar keeps going down. I want that other currency. How would you buy it?
You talking about as far as fiat or crypto?
Yeah, I'm talking about fiat. Like, how would you go if that, let's say the peso, let's change it up. The peso in
Okay.
Mexico is killing it. It's the global currency. How would you get the peso? Like, what would you do?
With the fiat currency right now, it's not the global power.
Right,
It's
but let's
very-
just say it is. Just I'm making a point here.
Okay.
Right.
Okay. So what you'll do is you will find something to be able to acquire, to be able to convert it into that peso.
Exactly. Normally you might have to go to a
Currency
go
exchange.
go to a currency exchange,
Yeah.
give them it, get that dollar back, and all that. Now, imagine if you can go online right now
Yeah.
and buy the peso online via an exchange. You go to a Binance and you have your bank account, your US
Yeah.
bank account, and you're saying,
Yeah.
I want the peso. You can go buy it today, and now
Yeah.
it's stored online, and you bought a cryptocurrency version of the peso, and now you own that. You don't need dollars anymore. So every time you get paid, you go buy the peso because that's what you want, because the dollar's not good. That's what
Jeez.
people are going to start doing around the world. If you're in another country, Argentina,
Yes.
Korea,
Yes.
all of them, as soon as they get paid, they're going to convert it to the dollar because now everybody has a bank account, a U.S. bank account. Now, for me, what I'm thinking is that means that there's going to be this we're going to dive into a little bit. So
Go ahead.
with crypto, you got to understand that not only what comes with this is because it's more because money is going to be more transmissible. Sending you money is going to be easier. What does that mean? We're going to have additional costs where transaction fees.
Correct.
Because there's just going to be more transactions, which means mining is the backbone of crypto.
Sure
You
is.
can't, if I send you $1, somebody's getting paid,
Yes.
right?
Yes.
If it's bank to bank, there's no costs. But if it's crypto, that is actually going on the blockchain and somebody's getting paid, which means to me, what's going to be the big play are miners.
Yes.
People who invest tons of money because now they're basically credit card transactions.
Correct.
They are Visa. They are MasterCard to a large degree, right? Or I'm
Yes.
sorry, not Visa, not MasterCard, but like Stripe,
Correct. Oh yeah. Stripe. Yeah. So payments. Yep. You got it.
PayPal. They
Yep.
are PayPal.
Yep.
PayPal, short PayPal. Short PayPal.
Yeah.
That's what matter of fact, I might actually do that on Monday and start shorting the PayPal because why would I need PayPal? I got it online where I got every other currency I need.
Exactly.
And the transaction costs are going to go to the people who own the actual mining. I'm gonna start buying miners, getting those transaction fees, and kill the game that way.
Do you know what state has become probably the most valuable state now since he signed this act?
Probably Texas.
Oklahoma.
Yeah.
Why? Because the most valuable real estate right now are data centers.
Yeah.
Data
So
centers. Yeah. You
and
agree?
then
You
go-
disagree?
No, I agree that we don't have enough data centers, but 100% data centers are exploding. There's going to be a ton of them coming out. But you also have to understand this. You're right, data centers are going to have a high trajectory. More and more people are going to invest into that. What comes with data centers? Electricity.
Yes.
Electricity costs. We do not have the grid to be able to support the amount of data centers that are coming online, which means you're going to see a lot more investment into power. Solar power is going to go up because every one of those data centers has to have solar power. It's also going to see you're probably going to see a lot more, lower grade nuclear facilities, nuclear power coming on. They're going to actually power. I think Meta, Facebook, Meta, whatever. They are actually talking about that, spending billions on a nuclear reactor to power the data center.
And that's a way for them to raise more money. I'm
telling you, man, it's a beast. We headed into a new age,
with new technology, new energy. They're not paying for that with their own cash, guys. They're not doing that. They either getting the money from the government, the subsidies, or they're raising the capital via the stock market. It's been manipulated by the government. It's the name of the game is raising capital. Now, Cliff, real fast, Cliff, can we go a little deeper? Can we go a little deeper on the crypto?
What's that?
Okay. Here is how he's doing this. Okay. Now let's bring in the Secretary of Commerce, who is the godfather of cryptocurrency. Listen to this setup, Cliff.
Liquidity for Bitcoin, and let's go ahead and bring Bitcoin over so we have this on our game board as well. So here we have Lutnick, the CEO of Cantor Fitzgerald, bringing in $2 billion of new liquidity entering the system without triggering any supply-demand metrics. And then we have Bitcoin right here. So we're starting to see how this is shaping up. Now, as I said, Lutnick is in the government. Now, before he was just part of Wall Street, but now he's part of Wall Street and he's in the government, and he's writing the policy in order to do this. It's a book right out of Wall Street's financial engineering playbook. By the way, Bitcoin 2025 is coming up in Las Vegas here. I'm going to be there speaking. Well, I'll be there. Okay, so now here's where it starts getting interesting. Now, Cantor Fitzgerald is an old school Wall Street investment firm. They've invested into many things, like, for example, over here, a very controversial company you might have heard quite a bit about, Tether. Now, Tether is a US dollar stablecoin. It's the oldest US dollar stablecoin, and it's been rumored for years and years and years and years and years to be behind Bitcoin pumping and all of that. I've never believed any of that. That's a whole nother subject. If I'm going to make a video about that, let me know in the comments down below. But Tether is the largest US dollar stablecoin company, and they hold over 83,000 Bitcoin. Now, who owns a big piece of them? Well, that would be, of course, Cantor Fitzgerald. Here we have over here, Cantor Fitzgerald owning about 5% of Tether. So Lutnick owns Cantor Fitzgerald, the CEO. They have now launched Bitcoin products, and they also own 5% of Tether over here. Okay, so we're starting to see how this whole thing shakes out. Now, why would this legacy Wall Street firm buy into the biggest stablecoin printer in the entire world? Well, probably because they know exactly where this is headed. All right, now another big investment that Cantor Fitzgerald has made is in this company, Strategy. You might have heard of them, formerly MicroStrategy. They've gone ahead and changed their name because they're all in Bitcoin now. Now, at this point, we know that Cantor Fitzgerald took a massive investment into Strategy. We don't know exactly how much ownership, about $1 billion just in Q4 of 2024, so very recent. So if you think Strategy is not a good play, well, you might want to go talk to Lutnick because he just put $1 billion in last quarter. He obviously understands something about Strategy that we don't. So now we have Lutnick inside the U.S. government, the CEO of Cantor Fitzgerald, making massive investments, $1 billion investment in Strategy, $600 million investment into Tether, because they know exactly what's going on. But here's where things even get more shocking. As Commerce Secretary, Lutnick is working with the Treasury and the White House economic advisors to build not one, but two government-level Bitcoin programs. First of all, they are building a U.S. sovereign wealth fund, of which potentially Lutnick will be in charge of. So Lutnick now will be directing the U.S. government to be investing money as part of a U.S. sovereign wealth fund. Now, what do you think that Lutnick might advise the U.S. Sovereign Wealth Fund to buy? Well, if you're looking at this web, you might think Bitcoin, and you'd probably be right. The other plan that the government is putting together is a U.S. strategic Bitcoin reserve. And of course, what would they be buying specifically? Well, it says it right in the name, and that would be Bitcoin as well. So now we have Lutnick, CEO of Cantor Fitzgerald, making billion-dollar investments into Strategy and into Tether, and as well as creating a $2 billion product around Bitcoin. At the same time, working inside the government to get the government to buy Bitcoin for both the U.S. Sovereign Wealth Fund and a strategic Bitcoin reserve. Now, what would the goal of all this be? Well, of course, if you can get the government to make it budget neutral, meaning that they don't spend any more money from taxes, then the direct cost to the public is none.
Yeah.
But let's be real here. That's government code for financial engineering. But what do we really get here? Well, we get a man with power in both government and finance.
Yeah.
We get a $1 trillion firm issuing Bitcoin-backed leverage. We get two of the biggest whales in crypto standing behind it. And we have a government quietly positioning itself to become Bitcoin's biggest holder. Now, look, this isn't some dream. This isn't some fragmented movement. This is a Bitcoin flywheel machine, a feedback loop machine, if you will. So how does this machine actually work, besides obviously putting all these pieces together? Well, what happens is, number one, is we get a capital injection into Cantor's play. So by Cantor Fitzgerald working with Wall Street and allowing Wall Street to bring that liquidity into the market without having to sell their Bitcoin, we have all this new capital entering the market.
There you go.
Now, all that new capital entering the market boosts their buying power without increasing the supply.
There you
So
go.
if we can do that without increasing the supply, that pushes the price up. That puts upward pressure on the price. But that's just the beginning. Step number two is then the market activity starts to surge. So all that fresh leverage, all that demand starts flooding in. Now we have traders, we have funds, we have whales starting to use borrowed capital to accumulate even more Bitcoin. Because, of course, they're all expecting the price to rise. Now, this increased buying activity pushes prices higher, just like we saw during previous bull runs, except for this time.
So, Cliff, right there, Cliff, what do you think he's saying?
Yeah, it's a feedback loop, right? You buy Bitcoin, Bitcoin price goes higher. You borrow against Bitcoin, buy more Bitcoin, Bitcoin price goes higher.
Yep.
You know,
Yep.
well, I mean, the problem with that is you're going to have a pullback at some point. You're going to have a major pullback at some point, but you're hoping over the long term. What they're saying is I think they're probably looking at a 3 to 7 year horizon.
Correct.
And saying that it's going to rise for that because you can have the global acceptance of crypto and the global marketplace starting to invest in the crypto, raising the value. But at some point in time, everybody borrowing to put that money in, it can only go so far.
Yeah, it is. But here is what they're probably banking on as well. If the government is backing the Cliff, could it not prolong it?
I mean, theoretically, so if you really want to get into it, if the United States is guaranteed to print money and we're not going to stop, then you can estimate that a percentage of that is always going to go into Bitcoin. So therefore, Bitcoin will always go up against the dollar.
Yes, but do they have to even print any additional money? If they're creating debt out of Bitcoin over and over and over again, all they need is for the government to say, we back it.
Right, but the debt is coming from fiat currency, right?
Yeah,
They're
yeah.
getting the
Well,
right.
Yes and no. Yes, it is, but it's not new money. In other words, they're not printing more money. Think about it.
It would be if it was the bank.
Got you. So what you're saying is the bank is still getting their fractional reserve lending from the government, and then they turn around and they have two mechanisms to fractional reserve lend on: the fiat portion and the Bitcoin portion.
Right. And so now Bitcoin has
Makes
a
sense.
fiat play to it, which means, but so basically you have fiat currency that is being printed, but it's buying a asset that's like gold where there's only so much of it. Therefore, the price can only go up as long as the government keeps printing.
Correct. All they're doing is expanding the balance sheet of the Fed. All they're doing. They do that now. So what the Fed is doing right now, the Fed has liquidated a lot of their mortgage-backed securities. A lot of them. Not all of them, a lot of them. But they're replacing them with Bitcoin-backed securities. They're just exchanging this. It's a sleight of hand. That's all it is. Trump is literally kicking the can down the curb. That's all he's doing. That's all he's doing.
Yeah, but I mean, the underlying value of Bitcoin is in its there's no utility other than it's transactional. You know, it has a nice transactional utility to it. But there's no actual utility to it. So you're only buying on the idea that it's going to go up, that people use that as a gold, right? They use this gold to hold and get additional value. So probably most people, you're probably going to see people probably use 5 to 10% of their portfolio maybe in Bitcoin as a
Probably
hedge.
so. Probably so. But you're going to begin to see a lot of Blackstones, BlackRocks, Vanguards, State Street heavily invest in Bitcoin and stablecoin because they have to, because the government is backing it.
I wonder, I mean, do you think they would create their own crypto? I mean, for example, Facebook wanted to. They wanted to create their own stable or their own coin.
That because that's going to be a requirement of the government. Because remember what they were saying is the Trump wants the banks to have their own coin, which forces the banks to have to compete with one another to say, hey, Liddell and Cliff, Wells Fargo, we have better products than Chase or the Wells Fargo or than the Veritex or from any credit union. The reason why, because they have competing coins. It's a way for them to create more products. They don't make any money. Banks don't make any money unless they're lending money out.
Yeah, but if you have the banks actually, let's say like Wells Fargo has their own coin and Chase has their own.
Mm-hmm.
They're probably gonna build out their own
yes.
They're gonna build out their own mining system in house.
Yes,
so they're gonna own it all. They're not gonna allow third parties to be able to come in and understand the transactions. No.
That's going to be a requirement for them to play the game.
Man, they're gonna have a list of every transaction in a much easier way than they do now. I mean, they already have it.
Yes.
But man, every transaction, and that's another point too with these stable coins is you're going to have a ledger of the entire world's transactions. Like Bitcoin, you could see the entire ledger. You could pull it up right now. You're going to have the entire global infrastructure ledger available online that anybody can see.
And that has been the goal the whole time. They effectively have digitized the dollar.
Yeah.
It's done. There's no need for no Fed now, because with this new Stablecoin Act, the Genius Act, it's Fed now. The government can see everything you're doing. All of it.
Yeah, I still see probably the two biggest plays that you can, if you want the infrastructure piece of it, you know, because my whole thing is that, you know, if everybody's buying gold, I want to sell shovels. So if that's the case, it's in energy, it's in Bitcoin miners,
AI,
yeah, and because what's going to end up happening, this is what I think is probably the smartest thing to do, is you buy a multi-currency miner, and then you connect an AI to it, and the AI is automatically finding the best transactions to mine, given that at that moment it sees 10 transactions come in, it finds the most profitable, it does the transactions just on that, so you're getting the most profitable transactions every day.
That is sick. That is sick. Think about AI being able to trade your cryptocurrency for you better than you can.
Oh yeah.
That's crazy. That is crazy. Yes, sir. But Cliff, man, we were going to dive into the real estate stuff, but I saw something told me we're gonna park it for a little bit.
Yeah.
We are. But guys, man, that's all we have for today. Real quickly, guys. Be honest with you, we'll dive into the realtor stuff tomorrow, next week, which will be fine. Real fast, guys. It is for you to have a licensed appraiser on the screen, guys, is not normal. Someone you can actually reach out to, touch and feel and talk to and gain wisdom from, guys, when it comes to your commercial, your luxury homes and your single-family residence, and also your land development as well. Cliff, man, tell them about the services that you actually offer with Hunter Appraisal.
Well, so we do appraisals across the board, and we also do consulting, right? So basically, you're going to be working with me. I've done many flips. Dale knows that. We work together with multi-million-dollar flips that we've worked on before. And I've actually, gone in and done appraisals on any type of home, luxury homes, all the way down to, mobile homes, everything. So I can kind of give you an idea on what directions to look into the market, what's happening within the marketplace, and be able to provide you guidance on, from an appraiser standpoint, where the values are coming from. So if you're looking for an appraisal, you're looking for consulting, go to hunterappraisal.com, give us a call, go to our website. You can actually fill out a form, and we'll get back to you as soon as possible. Either me or my assistant will get back to you, and we'll see how we can help you.
Real simple, guys. Hey, don't sleep. Reach out to Cliff. Go to hunterappraisal.com. All right, don't sleep. Also, guys, real quickly here, we are also giving away our free ebook called Distressed Property Investing, guys. We talked about a lot of stuff today, which was great and wonderful and phenomenal, and people got excited, which is wonderful. All I can tell you guys is this book here tells you how to locate a distressed property in your city, county, or state, guys, in city, county, or state. Because you make money when you acquire, not when you sell. The selling is the icing on the cake. Most investors lose it. They lose it on the purchase because they buy at retail or above retail. We in Cliff, we buy below wholesale. In a high interest rate economy, you reverse engineer the entire transaction, and you get more aggressive on your purchase price. That's how you do it. It's extremely simple. It just so happens that it's private equity investor, real estate investor, done own millions of dollars worth of real estate, and Cliff, the exact same thing as well, guys. I would say, if me and Cliff are in the room, I'll put us up against anybody, and we win. We'd win in negotiations because why? We know what the hell we're doing. So, guys, it's real simple. If you want access to the free ebook, it's free, 100% free, guys. Click on the link below in the show notes. Scan on the QR code right there on the screen. Or if you're on Instagram or other places as well, TikTok or what it may be, direct message me the word real estate and my team will get you out the link today. Today, it is free. Don't want nothing from you at all. I just want to get you the information. If you want to say anything about anything at all, man.
Nah, man, this is just take advantage of the opportunity. You hear me say it all the time. You're one deal away. Take advantage, and you might be able to get that deal, and maybe sooner than you think.
Very sooner than you think. And just so happens, Cliff and I, we work on a little some for you cats as well. So be posted. Don't just stay tuned. But guys, man, Cliff say all the time. Cliff, go and say it, man. Before we leave, brother, you are what?
One deal away.
Just one deal away from changing your life, guys. You know how we end it before you leave. How you can. You see that thing? Take the picture for your mom and them. I just about it, guys. You guys have a good weekend, guys. See you next week. All right, y'all. Peace.
Okay, so you did fixes and flips first, or were they? Now it sounds like you're more buying whole. Okay, so you're wholesale first. Okay,
because I was broke. I had no credit, I had no money, so I had to get some money coming in. So I learned how to do wholesale.
And you were doing wholesaling at the good time too.
2000.
When it wasn't so saturated.
I kind of saw the debacle coming. Okay, it didn't make any sense. I was like, wait a minute, how can you lend out to retail buyers 99.7%?
Yeah,
just a little bit of a down tick. It's insolvent.
And you got to remember, in some states, because I lived in Florida at the time, you could have loan to value above 100% of your property.
Right.
The first property that I bought, it was 110%. We left the bank with like $30,000.
Yes. Yeah. Yes.
It was amazing to me. I was like, why am I not doing this all the time? But then clearly 08, 09 let me know why people shouldn't have been doing that all the time.
08, 09, that's why I made a lion's share of my money.
Wow. Okay.
Actually running from the cows, I was running to it.
Of course.
Because I saw it was coming.
Okay.
A lot of my business colleagues back then were buying flippers.
Yeah.
I didn't think it was wise for me to share 50% of my profit with Uncle Sam. He didn't do no work.
Okay.
So why would I give him free money?
Of course.
Okay, how can I how can I make sure I'm still legal, but keep the lion's share of the cash flow?
Of course.
So I began studying the tax code with my accountants and CPAs, and I said, okay, I'm going to buy a whole lot of properties. Now watch this. I actually buy a lot of properties. I take home money when I actually acquire it every single time.
Okay, you need to break that down just a little bit.
If you wanted to know how successful real estate investors make money when they acquire real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holla at your partner, and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big